What exactly are stocks? Let's begin with the fundamentals. Stocks, sometimes known as equities, are a type of security that represents a portion of a publicly listed company's ownership. When you acquire stock in a firm, you own a part of that company. A share is a stock unit. The more you purchase, the more stock you own in a firm. The reason why companies issue stock is to raise funds to expand their operations. What exactly is a stock exchange? The stock market is a network of stock exchanges where traders and investors can buy and sell shares of publicly traded firms. A private company's stock gets listed on an exchange through a process known as an initial public offering, or IPO. Investors buy those shares, allowing the corporation to raise funds from the public to expand its operations. When a firm's shares are listed on a stock exchange, it becomes a public company, and investors can buy and sell them on an exchange that records the stock price. The supply and demand for each security influences the price investors and dealers are willing to buy or sell. How does the stock market function? To understand how the stock market works, first you need to know that there are two sorts of markets, primary and secondary. Securities are created on the primary market, and a company's shares are listed through an IPO. Remember that an IPO is the first time a company's shares are publicly traded. Every day, the supply and demand of these shares and the hundreds of other equities on the market are purchased, sold, and traded on the secondary market, which is effectively the stock exchange. What are brokerages? Next, we have the brokerages. Consider a brokerage firm a form of financial organization that serves as a middleman or broker. They assist investors in buying and selling stocks by dealing with buyers and sellers. A transaction can be made in a variety of ways. You can place buy and sell orders over the phone, online, or using an app. The majority of brokerage businesses charge per trade. Here you have two available options: full-service and discount brokerage firms. Full-service brokerage firms are noted for providing a wide range of financial services and often allocate an advisor to each client. They may also offer additional financial services such as planning, advising, wealth management, and trust services. It's important to note that a higher level of service usually comes at a higher cost. While discount brokerages are a type of direct investing or online investing that does not offer financial planning or consulting services. Instead, they give self-directed investors access to online market research, online education, and several direct access trading platforms. You can choose the brokerage firm that best meets your requirements. What kinds of stocks can you buy? Now, you need to buy the stocks, but which ones? Let's cover the primary financial instruments traded on the stock market. Growth stocks versus value stocks. Growth stocks are shares predicted to rise quicker than the overall market. Growth companies generally outperform during periods of economic boom and low interest rates. Value stocks, on the other hand, tend to have more attractive prices than the market because they trade at a discount to what a company's performance might otherwise suggest. During the economic recovery, value stocks such as financial, healthcare, and energy firms tend to outperform since they produce reliable income streams. Common stocks versus preferred stocks. Common stocks are essentially ownership shares. These are the stocks that the majority of people invest in on the stock market or public exchange. You may be eligible for dividends if you own common stock or a share, and if the firm does well, you may receive a portion of the earnings. Preferred stocks are so called because they provide their owners first claim on dividends and asset distributions made by the corporation. However, preferred shareholders, in opposite to common stocks, have no right to vote in company elections. How should you decide what to buy? Once you have decided on the brokerage and are familiar with the stocks, the next step is to determine which ones you should go for. It all comes down to different factors. Let's find out. Decide your risk appetite. Risk appetite is the amount of risk that you can tolerate. Factors influencing risk appetite include investing, time frame, age, goal, and capital. Another essential factor to consider is your current liabilities. For example, if you are the sole breadwinner in your family, you will be less likely to take chances. Perhaps you'll have more debt. You may have a high risk appetite if you are younger and have no dependents. This may give you greater exposure to equities rather than debt. You may be able to invest in higher risk stocks, even within equities. The first step is to decide. Just keep in mind that risk and profit go hand in hand. Invest regularly. Next, you must set aside funds for regular investment. Create a personal budget, track your costs, and see how much you can save. A systematic investment plan is the most effective way to invest in the market. This lets you average the different market levels you enter. Keep good investing habits and slowly increase your investments as you gain confidence. Build a diverse portfolio. The main rule for developing any portfolio is to invest in a diversified variety of assets. This is because it reduces the impact of a specific asset that performs poorly. Putting all your money into an industry on the rise may be tempting. However, it is always preferable to diversify across industries. Lastly, use systematic investment plan to ensure you have securities investments through different market cycles. Rebalance your investment portfolio. Your portfolio must adapt to reflect this as your priorities shift over time. Every couple of quarters, you should rebalance your portfolio to ensure that you are not over or underexposed to any one company or asset class. This is also important when you get older and your priorities shift. The stock market is accessible to anybody. It is a life talent that must be learned. And it, like all good things, requires some patience, time, and study. You can make your money work for you and attain your goals and objectives by making wise investments. That's all, folks. We hope that you find this video helpful and it helps you plunge into the world of stocks. Please give this video a thumbs up and remember to subscribe to The Growth Mindset. Thanks for tuning in.